Hello traders, Happy New Year. It is Sunday, January 5th, and this is my first video of the year. Hard to imagine, things are really clipping along. I'm going to start with some market analysis because I haven't given you any picks recently. I feel that the market is trying to find its way right now. We didn't really know what the new year was going to bring. I saw signs of resistance in December. Lots of choppy price action to get to the all-time high. So let's take a look at what we've got working here. We had this drop in July and August, very deep, about 10% in a very short period of time. Possible warning sign. So we see this recovery and we have a nice bounce off of the 50-day moving average and AV/WABQ. We're above the 100-day moving average. We're heading into a seasonally strong period of the year. Awesome. So the market's got decent amount of buying, and now we challenge the all-time high. We were getting long in here on this breakout, and then we start seeing a series of dips. The dips are a little bit deeper. They're a little bit more frequent. What does that tell us? It tells us that every single move higher is being challenged. So by no means is this go, gotta have them, bullish mode right now. We're starting to see profit taking. So we move higher, we dip. We move higher, we dip. We move higher, we dip. This is not the same type of price action that we saw here or here. This is absolutely gonzo buying on heavy volume. This is the type of move that we can get behind, and we can add, and we can add, and we can add. As a bullish cycle starts to mature, you start to see deeper drops and longer recoveries. So it takes us longer and longer to recover from a move like this. You also start seeing a lot of little dips, every single move higher being challenged. So this is where we took gains on our bullish swing positions. We had some nice ones on from this level, and then blam, we get that FOMC reaction. All of a sudden, the Fed is not as dovish as they appeared to be. So we get the big drop, and now the market tried to rally. It tried to recover this long red candle. The open of this red candle is of particular interest to me. From a bearish standpoint, I would not want to see us get above it. But you can see bullish market, long term, big run, been a lot of buying. Buyers are conditioned, buy the dips, buy the dips, buy the dips. So of course, they're going to try and buy the dip. I knew this was going to be happening. I'm going to be watching the price action. I don't know what this week is going to have in store for us. We've got a number of news events that are going to be coming up over the course of the next couple of weeks. So the action is going to pick up. Could this have been just a little bit of profit taking into the first of the year? We've got very stretched valuations on stocks, meaning the valuations are very high. Maybe some investors didn't want to take gains last year so that they can postpone those capital tax gains until this year. It's possible, but we'll see what happens. So the market tried to recover off of this big decline, wasn't able to even get close to that open, and then we saw another leg lower. All right, we're within striking distance of the 100-day moving average. So the longer we kind of sit above this level here, and the longer we stay below the 50-day moving average, the more comfortable we are. That's a sign that there is some selling pressure. So sellers are keeping a lid on the action. What we would like to see off of a major support level is like getting jabbed in the ass with a cow prod. Whoa, you want to jump off of that level. That's what shows us excitement. So when you come down and you test the 100-day moving average, boom, you just want to fly off of it. Test AV/WABQ, boom, you want to fly off of it. The 50-day MA, boom, you want to fly off of it. The longer you kind of linger around these major moving averages, and the more comfortable the market gets below the 50-day moving average, the more likely it is to test the next level of support. In this case, it's the 100-day moving average. So I'm going to be looking for what the week has in store for us. We've got lots of economic news coming out this week. So we've got ADP coming out. We have actually Tuesday, ISM services is coming out. Very important number. We'll want to see if it is materially above 50. It came out at 53 last month. That's a pretty solid reading. So we want to make sure that economic growth is continuing to be strong. We've got ADP coming out. That'll give us a little peek at what the employment scene is like. And then on Friday, we're going to have the unemployment report. Initial jobless claims during the course of the last 4 weeks have actually been fairly low, somewhere in the 215,000 range. That should bode well for Friday's jobs report. We'll see. We still have one initial claims number coming out Thursday, so we'll keep an eye on that. Then as we start getting into the following week, after next week, can you believe it? JPM is going to be announcing earnings. So earnings season is going to kick off, and then the back half of January is going to be loaded with some earnings announcements. We also had the inauguration. Could Trump's tax policies and economic policies possibly spark some optimism? Maybe. We have the FOMC statement at the end of the month. So we've got lots of news that's going to be packed in during the course of the next 3 weeks. We're going to be watching to see what happens to the market right now. We've seen some nervous jitters. We've seen that sellers are engaged. Might there possibly be a weak number in there somewhere? Don't know right now. If I take a look at the price action, we're going to take this high from October 17th, and we're going to draw a horizontal line across. And you can see that is a pretty firm support level. And then when we draw a line across the top, you can see that the market has been in a horizontal trading range. That's often what happens before we get a trend reversal. I don't know that this is going to happen. It could simply be a little drop like this, just like this was, and then you start working your way higher again. So we've got to wait to see how all of this plays out. I'm a little suspicious, as you know from my 2025 market forecast. I see a lot of weakness around the world. So it's not just the US. I don't like what I see in China at all. They just posted their industrial profits. I think they're down 4.7%. They have been in a steady decline. China's going to be reporting their CPI numbers this week. They're in deflationary mode. That's because consumers are cutting back on their purchases. So prices are continuing to slide. The PBOC has been easing like mad. So they are trying to do anything that they can to stimulate economic growth, and they've been doing this for over 3 months to no avail. Right now, doesn't seem to be helping. They've got all sorts of credit issues. So China, to me, is the major dark cloud that we're dealing with, but we've got some domestic dark clouds too. One of them is home inventory. New home inventories are at levels we haven't seen since 2007. Interest rates remain high. Home insurance premiums are sky high. That's also preventing some new potential home buyers from buying their first home. So lots of issues there. We've got car inventories at very, very high levels. So average monthly payment for a new car, $800. So consumers, I feel, are really kind of pulling back. And as the month unfolds and as we start getting some of these statistics and data points, we'll be able to see exactly how strong the 2024 Christmas cycle was. Were people spending money? Were they cutting back a little bit? All of those are going to be important factors for us, and they will weigh on the market one way or the other. Either we're going to get a breakout or we're going to get a pullback. I still think that a pullback is more likely than a rally, but I'm not going to take a position one way or the other. That's why I'm going to give you a bullish pick and a bearish pick today, and then we'll wait to see how the market plays out. So how will I know if the market is going to start slipping? So we've got major economic news coming out this week. What would get me worried from a short standpoint? I do have a small bearish swing position on right now on ES, just a starter position. It's no big deal. I entered it in this area this week and I'm down on it. It doesn't bother me at all because it's a longer term swing position. So what I don't want to see as a bear right now is a big rally above the 50-day moving average that starts to gain traction and get us above this high right here, which that was around the 602.50 level, let's call it. I'd prefer not to see that. And if it happens before the jobs report, I'm not going to worry too much about it. Why? Because that jobs report is going to be critically important to the future price action. Anything before that is just going to be light volume, kind of try and recover, get the market back on track, program driven. So I'm not going to worry too much about it. If the unemployment report comes out and we get through this level up here, I'll respect it. I'll close the position down on the notion that we're going to challenge the high and probably go through it, and we'll have another leg higher. But before that number, I'm going to be hanging on to it because there's a chance that if the employment scene starts to change and deteriorate a little bit, if ISM services comes in soft, some of the other economic data points come in soft, I think that we're going to challenge this 100-day moving average. And right now, the fact that we're not able to get above that 50-day moving average, and we've already spent about 7 days below it, market's getting kind of comfortable there. That makes the likelihood of testing that 100-day moving average even greater, in my opinion. So let's say that the market does start to sell off. What will I be looking for? What kind of price action do I want to see? I wouldn't mind seeing a poke, a gap up above the 50-day moving average before the jobs number even. So show me what you got. Give me your best shot. Let's see if we can rally this thing up. And then I'd love to see a nice gap up with a gap reversal and a beautiful long red candle finishing back below that 50-day moving average. That would give me another lower high. And that would tell me that regardless of how the jobs report comes out, there is some selling pressure. There is some profit taking. If I see a move like that, I might even add to the position before the jobs report on Friday. And then from that point on, I would be looking at that as a sign that sellers are going to get more and more aggressive and test that 100-day moving average. So we'll see how those numbers play out. I am looking for that 100-day moving average to be tested. If we get a nice, decent-sized drop in here, it's going to tell me that this move is actually legitimate. I would still be waiting for, I'd take profits on my initial shorts. I'd be waiting for a bounce and another lower high. On that bounce, especially if it barely clears the 100-day moving average on a longer term swing basis, that is where I would start looking for some bearish swing trades on the notion that we could see a test of that 200-day moving average, possibly a trend reversal. Boy, very hard to pick trend reversals when the monthly chart of the S&P 500 looks like that. Okay, so there's no reason to be a hero. There's no reason to pick a top. There's no reason to trade against a trend like that until you have some confirmation. So those are just my beliefs on what might happen. Now I have to watch for the exact price patterns that tell me that it is likely to happen. So let's take a quick look at some stock picks, and I'm going to go into, might as well start with the bearish side. In the chat room back in here, I love this breakdown, these two long red candles on Carvana below the 50-day moving average. So this is a short that I showed everyone last week, and it has continued to decline with a big breakdown below the 100-day moving average. And that was kind of our first target. We wanted to see what would happen there. Well, Friday, it absolutely obliterated that major moving average. I feel that this stock has a good chance of going down to the 200-day moving average. So how do you trade this? Well, I think you day trade it, given that we've got major economic releases coming out this week. You don't want to necessarily go out there swing trading this. And if we look at the 5-minute price action from Friday, this right here is the tell to me. When you start seeing super tight, organized price action like this on heavy volume, it means institutions are in there selling. There aren't any bounces because whap, 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 whap. Every time a buyer shows up, bam, hit it, hit it, hit it, hit it, take it out. I want to unload my shares now. That's what that price action tells us. But you already know that because you know how I like these nice, tight, orderly trends. And this is what sets us up. And look at that volume right there. This stock has a very high likelihood of moving lower. I found that on the heavy selling search in Option Stalker Pro. And I'm going to go and take a look at, let's go into Green Royal Flush, see what we've got working there. We'll go into the daily chart. Mind you, what's the market done? Very choppy. Lots of two-sided price action, rally, sell-off. Overall, kind of treading water in this horizontal trading range. Not much to speak of. So when I look at stocks, I want to see something that has been moving higher with this backdrop. Just like Carvana, before the market had even cracked, it was starting to show signs of trouble up in here. So this is back in December, the middle of December. It's starting to roll over. December 19th, it is challenging the 50-day moving average. Right in here, you've got the market still December 16th at its all-time high. Carvana already showing signs of weakness. That's what we want to see. So if I go in and take a look at all these stocks, I am going to look at LUNR. I like this stock. Compression, breakout. Nice leg higher, digest gains, another compression, starting to work its way higher. It's through this horizontal resistance level. If we zoom out, you can see that there are a couple of major trend lines. This is a high plus trend line that it was able to get through. Got another one right there. If you connect that visually, that's another nice breakout to the upside. So the stock actually has some pretty decent volume in here. Take a look at the price action on Friday. And you can see stock opens higher, gets through the high, and it's able to close near its high of the day. When you take a look at a chart like this, in the back of your mind, you've got this really nice D1 chart. It's moving higher for all the reasons I've mentioned. But when you look at the M5 price action, what do you see? Choppy all over the damn place. How in the heck am I supposed to buy something that looks like this? Well, if you operate under the notion that this stock is going to be choppy and it's going to move higher, where would I like to buy some shares? What would be a good price for me to buy some shares? Well, the middle of this long green candle would be a pretty decent entry point. And so if I take a look at the high, which is roughly around 22, and I take a look at the low, which is 19, that puts me at about $20.50. Let's see if that makes any sense on the M5 chart. $20.50. Is there anything close to that price point? Yeah, $20.67. Sweet. GTC. That is where I would want to buy. If the stock pulls back to that level, I am a willing buyer. Okay? It's that easy. I'll take a look at it. I'll look at the price action. I'm not going to chase the stock. Maybe I'll add another one right in here. And since I'm not go-go gonzo on the market, I don't have to chase this thing at all. And I've got a couple of alerts working, and this one is at $20.36. If I could buy this stock with that type of chart pattern at these price points, I don't care that it comes all the way back down and tests the prior day low, because I know that it has a pattern of doing that. And then if I do get that, I'll have a small position on. I'm going to monitor it. I'm going to watch it. I'm going to want to see this open preserved here. But if it kind of finds support in there, even with a market pullback, the stock is finding support, finding support, finding support, I might be willing to add to the position there. So that's how I would trade it. That's how I would trade LUNR. And it does have some pretty nice price movement to it. So if you're able to buy it at $20.50 and it goes up to $22 or $22.50, that's a 10% move on a fairly inexpensive stock. I like it. I like CBNA. I think that stock is going to continue to move lower. So do you need to chase it? No. Any kind of jump, any kind of move higher on CBNA, you definitely want to look at, and you want to see if there's an opportunity for you to get short. So just start sending them some alerts higher up, and you could get these alerts Monday morning on the open. So I'm recording this well before the futures open. I have no idea what the overseas markets might do, but you want to take a look at any kind of gap up or gap down Monday. This is your clue right here. Gap up, are you above the 50-day moving average? And this, I'm going to spend a little bit of time doing analysis here because this is super important. I'm writing lessons right now, and I can go back into a one-day bar 5 years ago, and I could pretty much tell you what the price action was that day based on the candle in relation to the candles the previous days, how tall the wick is, and how deep the tail is, and what the body of that candle looks like. I can pretty much tell you what that price action looked like. I can come in here and I can tell you this day the market opened flat right where it closed the previous day. We'd seen some selling pressure in previous days. The wick is very small, so that tells me that very early in the day you started to see instant selling pressure. You start taking out the prior day's close, start taking out the prior day's low, you can add to the position. And this was a pretty progressive move featuring more red candles than green candles, not a lot of overlap, and you can see that the momentum continued to build through the course of the day with the stock closing, SPY closing on its low, and there's hardly any tail right there, so you know that it got hammered all the way down and decent volume. So we're going to be doing the same here. The reason that that's important is because if I can visualize what this day might have looked like, I can visualize what a gap up candle might look like tomorrow. What are the scenarios I would favor? Which ones would I not favor, and how will I know when they start playing out? So here's a mental exercise. Let's say the market gaps up tomorrow above the 50-day moving average. Okay, gap up. If I'm going to get a gap and go, what would I want to see? What kind of price action would tell me that buyers are super engaged? Green candle, green candle, green candle, right out of the gate. Nice upward movement, so you've got a gap and go formation. Nice grind higher. Big volume. That's what I would want to see on a gap and go, and that's the pattern that I would be looking for if I was going to trade from the long side on Monday. What would a bearish scenario look like on a gap up? Well, we gap up above the 50-day moving average. We want to see that support hold. If instantly that move is smacked down, we're going to see red candles, and we're going to close below the 50-day moving average. Then we're going to take out the high from Friday. Then we're going to take out the close from Friday, add. Then we're going to take out AVWABQ, add, and then we're going to continue to retrace this long green candle and sell off. So that's how you visualize the patterns that you're looking for intraday on an M5 basis to tell you which of those scenarios is actually playing out so that you know how you're going to be trading them. Thanks so much for watching, everyone. We will be doing a live event on Wednesday, and we will see you then. Keep your powder relatively dry. Not a lot of news until Wednesday, and then we start getting a number of releases, and that'll give us a sense of where the market's going next week and after that. Thank you. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.